With many people working from home over the last couple of years, the tax office has made some changes to the ways that you can claim tax deductions on your work from home expenses. Let's take a look. Tax time is approaching, so let's take a closer look at your tax return and how you can claim deductions to cover the added cost that goes with working from home. Okay, so there's three main methods that can be used for claiming your work from home office expenses. We're going to take a look at each of the three methods, and the beauty is you can calculate your deduction on all of the three methods, then choose the one that gives you the biggest claim. Now the first one we'll look at is the shortcut method. This one was introduced specifically for all the people that were forced to work from home during the COVID pandemic. It was all about making it a little bit easier for the common person to claim their tax deductions. And this covers all of your extra added costs that comes with working from home, such as computers, maybe desks, chairs, electricity, gas for heating, your phone, your internet, all of that stuff. What you do is you work out your hours that you're working from home over the course of the year. So you'd work out a representative 4-week period, multiply that across the year, and then you would claim 80 cents for every hour that was worked from home. It's an all-inclusive rate. So once you claim the 80 cents per hour for work from home time, you cannot then go and then claim your phone separately or depreciate your computer separately. Once you use the shortcut method, that covers everything. Okay, so you need to keep a record of your hours and how you come to your numbers, and then you do that for what they call a representative 4-week period, so a normal 4-week period. But then say if you took 4 weeks off annual leave, you'd have to adjust that into your rate because that 4-week period of working full time would no longer be representative if you only worked 48 out of the 52 weeks of the year. So this is by far the easiest method. Once you've worked out your hours, you just multiply it by 0.8 for your 80 cents, and that's it. That's your claim from work from home. It covers everything. Now the next method is the fixed rate method, and this is calculated at 52 cents per hour to cover your home office running expenses. So it covers your depreciation of your office furniture like your desk or your chair. It covers your utility bills of your home office, your gas for heating, say, your electricity for heating, for lighting, for running your appliances, for your air conditioner, that kind of thing. It also covers cleaning costs of your home office area. The main way it differs from the first method that we went through, and the reason that it is a lower rate, being 52 cents on the dollar compared to 80 cents on the dollar, is that it means then once you've claimed that 52 cents per hour, you can then claim your phone and internet, the work portion of that. You can claim that again separately on top of this. You can also claim depreciation of office equipment such as your computer or your printer. You can claim the work portion of that separately on top of this as well. Now you need to keep a record of your hours from the work from home portion, the 52 cents in the hour portion, maybe a diary, some correspondence from your employer, something like that, something to back up your claim. You also need to keep receipts for your internet, for your phone, that kind of thing, your computer, your printer, these other things that you're claiming separately. And you also need to keep copies of your phone accounts, because you have to be able to back up how you came to your number. For example, of saying that your phone was 60% work use. You're going to go through your phone bill to work that out. Now the last method we'll look at is the actual cost method. Now to use this method, you have to have incurred extra cost as a result of working from home. So extra electricity, you have to buy a new desk, you have to buy a new chair. They have to be expenses that you would not have occurred if you were not working from home. If you share your house with other people, if someone else is in your work area, say your work area is the lounge room, if someone else, a member of the household, is in the lounge room watching TV while you're working in the same room, then by these rules, you cannot claim the electricity or anything associated with that, because these costs were not additionally incurred. If you weren't there working, your housemate was still there watching TV, the electricity was still getting used, so that means there is no extra cost, which means there is no extra claim. It has to be additional cost that would not have been incurred if you were not working from home. So make sure your work area has you in it and no one else. This method really works best with a separate home office room. If you don't have a home office, if you're in shared spaces with other members of the household, your additional running expenses and therefore your deductions are going to be minimal. So you can claim depreciation on office equipment and furniture that costs over $300. If this piece of equipment like a computer has an effective life, for example, of 4 years, then you claim the work percentage of that computer over the 4 years, not in the first year itself. It has to be depreciated over that period of time. But if it's under 300 bucks, then you can claim it in the first year. You can claim cleaning of the home office area, but you have to apportion it as a percentage of the whole house. So if your home office is 5 square meters and the whole house is 50 square meters, then you'd only be claiming 10% of that cost. Now for your heating, cooling and lighting, and this one is going to confuse people, but the guidance from the tax office is that you need to pull out your electricity bill and you need to work out the cost per unit of electricity. Well, you don't need to work it out, it'll be shown on your bill. And then you need to work out the average units per hour, which is the power consumption per kilowatt hour per appliance. I know you're confused already. And then you take that power consumption per hour and multiply it by each appliance for the number of hours that it is used during the year. Confused? So am I. And of course, you can claim all of your office consumables. So this is all of the equipment basically that is below $300. So mouse, keyboard, maybe some like a desk lamp or something like that, staplers, stationery, all that stuff. You got your phone and your internet. So what you have to do here is work out a work-related percentage over a 4-week representative period. You'll go through your phone bill and you'll highlight all the items that are related to work, and then you take the number there and you divide that by the total use to work out a percentage there. For the internet, you'll work out a proportion of the total expense based on how many hours you use it for work. And as always guys, you need to keep good records here. So you're going to have to keep all your receipts, all your bills. You're going to have to substantiate how you came up with your work-related percentages over a 4-week representative period of your working from home. So that's it guys, 3 methods that you can use, you can choose, you can work out the deduction for each of the 3 methods, and then you can go with whichever one has the best bang for your buck. Now, if you want any help with this stuff, because some of it still is a little bit confusing, well, you can go to the link in the description. We can help you with that. Otherwise, I'm also going to put links to the tax office website, the ATO website in the description. You can go there and you can do your own research. But hopefully we have helped you out a little bit and at the very least pointed you in the right direction. Okay, thank you very much for watching. We'll catch you later.